Yes guys, welcome back to another video on the channel, and it's good to have you back. And I did a little message into the free group to ask you lot what you wanted for this video, and I have a few suggestions. So a few of you asked what time should I be marking liquidity levels prior to the New York session, what time should I be marking them levels out, setting TPs, and where to run a valid stop, and also does it always have to sweep a major buy side liquidity for it to be a valid setup inside of the New York AM session. So that's what we're going to be going over today, and also a full breakdown trade which is going to be in the mix of a trade we took last week on Friday. So let's get straight into it. So first of all, you want to have your charts open with NQ and ES. So you want to be looking at both the pairs on the same time frame. So we'll start on the 15-minute time frame to mark out our liquidity levels. So note down 15-minute time frame, you're marking out the previous highs and lows. And for ES as well, you want to monitor ES. The reason you want to monitor ES and NQ to see if they're correlated, and you can also look for an SMT. What I mean by an SMT is that if NQ creates this high here and it creates a low, and ES creates a low and a high, so it's also indicating that ES is more bullish, therefore NQ is lagging behind, and it actually means that NQ has more upside potential basically to come in the short term. But this is obviously on the 15-minute time frame, and there is no bullish SMT here as we currently stand. But on the lower time frame, say when we're on the 1 to 3 minute time frame, then you look to see if ES is creating a higher high and NQ hasn't. That's almost like a sign, or call it an indicator, to know that NQ is about to pump. So it's good just before a displacement. It's a confluence we use for the trades before taking it. So here is an example of Friday. So we're going to mark out London highs and London lows. The London session runs from 2 a.m. to 5 a.m., which is there. And then you just want to mark out the highs and the lows during the London session. Very simple. So we're going to mark out this as London highs, and this will be London lows. And then same for ES as well, London highs, London lows. And look, ES has already taken London lows prior to the New York session open. Alright, so very simple. Now we've marked out London highs and London lows. We just want to wait and be patient. Fuck daily bias. Everyone's always like, daily bias, what's the bias? Fuck the bias. You don't need a bias when trading. You can just see how price is. Just monitor price prior to the macro. We trade 950, 1010 macro. That's the macro we trade. Don't worry about daily bias. Don't worry about anything else. Watch what price is drawing to prior to the macro. Alright, so imagine price came down and swept London lows prior to the macro. Then you would think in the back of your head, you'd be like, okay, all right, swept London lows. We've just tapped into a 1 hour bullish below the London lows. I want to see longs. You don't want to look for shorts, do you? You don't want to look for shorts. You've just swept London lows. So then you can almost have in the back of your head a bias of longs. But when you're at the New York Open or prior to the macro, don't be thinking I have a bullish bias for longs. You can have a preference, say, okay, in the back of your head. But the reason why it's not good to have a strong bias against something is because it will, I promise you, it will blind you from the fact that an amazing short setup or the opposing setup is happening right in front of your eyes, because you won't see it. You'll be so caught up looking for longs that you'll miss the fact that there's an amazing short setup. So make sure that you have an open bias and just monitor how price and what it's drawing to. So we're going to fast forward the chart. We're going to drop down on both time frames to the 1 minute time frame. So let's monitor price before the macro, and the macro will run from 950 to 1010 is when we look for our entry during the New York AM session. And the second macro runs from 1050 to 1110 AM. So if you don't catch a clean setup inside of the first macro, then by all means take a look at the second macro to see if you get a clean setup. If not, cool. Wait until the afternoon session. You got it from 2 to 3 p.m. and you can see if you find a setup in there. You don't have to take a trade every day. I know some of you are itching to, obviously everyone's here to make money, you know. At the end of the day, we're all here to make money. And the human brain works in a way where it's like, I need money now. And everyone thinks the same. Everyone thinks I need to make money now. But that's not how trading is. You can't just make money now. All right, maybe you'll get a few trades where you dive into the market and you catch, well, it's basically a gamble. You won a trade and you had no reason behind taking that trade, but you just took it and you made money. That in the long term is what will blow your account. It will be gone. So this is why it's good to stick to macros and take setups which meet all of your criteria. Okay, so there you go. London lows have been swept. on both NQ and ES. And we're also, take a look, we're inside of the macro now. So we want to see a bullish displacement for NQ, because we only trade NQ, but we monitor ES to see how it's basically moving, to be honest. And it also gives us other confluences to why the NQ trade will make it stronger for us and make it more, it gives us extra confluences on why we should take a trade on NQ. So if ES was to create a swing low and then sweep that would be unicorn setup on ES. However, not on NQ. So it means that NQ is now more bullish because ES is extremely bullish, if you get what I mean. So let's fast forward the chart and see if we get a clean setup and a displacement to go long. So this here is a previous swing high which NQ has just created, and this would be our level of a displacement. So we look for price to displace through this level, and ICT explains it very well, where a displacement, imagine an elephant jumping into a paddling pool full of water, and all the water then displaces out of the pool onto the floor. Well, that's what we look for in price. You want to see a displacement where price displaces higher with a lot of volume and energy towards that certain direction inside of the macro, leaving behind a fair value gap for our entry. And also we want to make sure that we are not risking more than 25 handles per trade. And let's fast forward ES. Okay, so on ES, I'm not sure if you can see, but we have a unicorn set up here. See if you can see it before I mark it out. Right here. So there's a previous swing low on ES, and it swept that previous swing low and it's created a swing high at the same time. So let me remove this line, it'll make it a bit more clear for you lot to see. This previous swing high is what we would look for to see a displacement on ES higher. Right, now let's see if we get a nice displacement on NQ for our entry. Okay, lovely. So we have a 1 minute bearish gap here, which would be a perfect entry to go long, and we'd run our stop around this level here, so it wouldn't be much of a big stop. But as you will find is that we don't actually catch an entry off this 1 minute bullish gap, and it doesn't retrace back into this bullish gap. So let's monitor price even more. And we didn't enter off this 1 minute bullish gap. Why, you may ask? Look at the stop. We would have to put a valid stop of around 37 handles, which is way too big. As I said, we don't risk more than 25 handles. So on the 2 minute time frame, we've seen this 2 minute bullish gap, and we was entering off a tap on this 2 minute bullish gap. And as soon as price came back down in, we are in. And we would run a stop around this low here of 20 handle stop, and we was going to target London highs. Simple. So let's see if we catch an entry. And there you go. That was our entry right there. We entered off this 2 minute bullish gap at 49.50. Our first DP was at 25 handles. And that's the answer to one of the questions and suggestions for this YouTube video. Our stop will never be greater than 25. And we ran our stop on this trade at 20 handles around this level there. And our first DP is always at 25 handles, which is equivalent to 5 points on ES. So NQ is basically 5 times bigger. NQ is 25, and first TP on ES, if you trade ES, is be 5 handles. So that's our level for our first TP, where we closed 50% of our position. Our second TP, we ran around this level here at around 50 handles, and we actually put our final TP at this previous high here. So it was we was targeting around 95 handles or so on this trade, and this is a minor buy side liquidity created around the New York Open, and it's around 95 handles. So you'd mark this out as a minor buy side liquidity. By all means, you could 100% target London highs as your final TP, but in this instance and inside of our group, we targeted this minor buy side liquidity for around 95 handles, because we usually put our final TP sitting around 100 handles, and during the summer months, price doesn't have the greatest amount of volatility to work its way up all the way to London highs, so that's why we put it at this level here. But the price action over the past week or two, I'm starting to notice that it's almost, now we're trading the September contract, the price action starting to turn more into the winter months as it used to be. So as we go throughout the next few months and closer to the winter, the price action is going to get extremely volatile and a lot more clean. So let's see how this trade plays out. Okay, so first DP was hit, and in this instance we moved our stops to around a 5 handle drawdown, which is around this level here, and we had closed out 50 to 60% of our position. And there you go. So our second TP was smashed, and that means we was around 70% closed out, and we moved our stops not only to break even, but we moved our stop to in a profit around 95875. So it's completely risk free at this point, and we're 70% closed out of our position. I wasn't currently 70% closed out, as I was trading with half risk on this trade with 2 contracts on each 300k account, so I wasn't able to capture a second TP. But on my FDMO accounts and my Top Step accounts, I was able to capture a second TP, just not on my Apex account. So let's see if we get taken out for a profit or we get final TP. And that's it. Very simple and clean example of one of the trades we took this week. We got TP2 and then it came down and took us out. We caught nice gains on Friday, securing around 51 handles profit. So it was a very good day on Friday. We didn't get final TP, but it took us out in a nice profit. But it doesn't always have to sweep London lows or London highs for it to be a clean setup, even prior to the macro. So let me remove all of this off the chart so I can explain to you quickly. Don't worry about any of this, but say we're inside of the macro and prices come up to this level here. This would be a minor buy side liquidity in a premium, because price then would retrace higher and sweep this minor buy side liquidity, and what we'd look for price to do is to go above the given minor buy side liquidity, retrace, create that previous swing low, and then take out this swing high which it created. So the first sweep of buy side liquidity, we look for it to get taken out, so you can anticipate a stop hunt or anticipate the previous short-term high to be taken out, and then you can see a displacement lower on price. Displacement would be below that previous swing low, and we call this a unicorn setup, and it's a very high probability setup. And you can see here that it was one of the confluences for the trade we took on Friday, because we've seen a unicorn setup on ES form where it had taken out that previous swing low. It would be more of a clean unicorn setup if it took out this previous swing low like this and then displaced higher, but it still took out one of the previous swing lows and then displaced higher after. I haven't fast forwarded it, but it did displace higher and it was a clean setup and a confluence to the trade we took on NQ. But this is an example of a unicorn setup where it takes out that previous high on the lower time frame. On the 1 minute time frame is when we look for our unicorn setups. But you can get a unicorn setup on the 5 minute time frame, the 15 minute, the 1 hour time frame. All time frames you can get a unicorn setup, but inside of the macro we look for it on the 1 minute time frame. And to mark liquidity, you want to be on the 15 minute to 1 hour time frame. So say you're on the 1 hour time frame, you would mark out prior to the New York session at 9:30. You just mark out the major highs. So this would be a major buy side liquidity, as that's all time high. And you'd mark out this previous low here as a major sell side liquidity. This one would be a major liquidity, because it's not only London highs, but we also have a 1 hour bearish gap resting above it. And then you could mark out these levels here as well, and then we got a pair of equal lows. So we love to target equal lows if we're going short, or see the equal lows get swept, and then we can take a long position off equal lows, well, relatively equal lows. And then for setting take profits and stop, obviously your first TP is at 25, your second TP would be around 50 handles or a minor buy side liquidity. Your final TP would be the opposing liquidity. And then I get a few questions about people asking, does it work in Forex? Does it work in crypto? Of course, it works in all markets. It's how price seeks liquidity. I personally trade crypto, but only for the long term. I got a little Bitcoin position at the moment, which I'm holding until mid of 2025. And you can trade any Forex pairs or crypto or even indices or other things like oil. ICT concepts work for it all. But regarding macros for Forex pairs, you want to trade USD Forex pairs, because obviously our macros are based in US time and the macros will work for the US pairs. So trade Euro USD, GBP, USD, etc. So that's if you're trading Forex, then obviously trade the USD pairs. And I hope I've answered the majority of your questions. If you do have any further questions, I answer every single comment on my videos. So make sure you just drop a comment and I'll answer any questions that you may have. I hope you guys enjoyed this video. Every single video we come out with bangers. And obviously I put inside of the free group, I asked you lot if you want to see me start actually doing like daily vlogs and stuff. So I've ordered a camera, it's on its way. I ordered a mad camera, 4K, we're getting the best content. We're going to take over the whole of Miami, and it's going to be insane. Like the amount of content and the quality of the content, there's going to be no one doing it like us, I promise you. So stay tuned for that. That will be coming real soon. And we're going to be going all over America, all over the world, and taking over the whole trading space, because I see all these other people and they really ain't doing it like the way I'm going to be doing it. I'm going to fully take over. It's going to be mad. And so are you lot as well. Everyone who's with me, we're taking over the whole industry. It's going to be mad. And I will see you guys in the next video. Have a good rest of your weekend.
I just did my 39, gotta change my sheets. Shit be rubbing on my body, sucking till my knees get weak.